This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. Today's video, I'm going to focus on multiple time frame trading, and I want to look at the IWM and give you all the reasons in different time frames where you could have taken a trade, I think with a pretty high confidence level, taking everything from my book as well as my course and kind of putting it all together. I get a lot of questions from people who are taking the course who just, I think the examples will help them have a better understanding, and anyone who's interested in trading in multiple time frames will get something out of this. So let's go ahead. I do want to mention that I am offering my book at a discount. If you go to rabilstockresearch.com/book, you can find the details. This is multiple time frame trading. It gives a lot of detail about how to incorporate MACD and ADX as well. And also, I'm putting in the description below is the link for the book. All right, let's get into this now. Typically I have a monthly here in the bottom left, but I've switched this to a 10-minute chart. So we've got a weekly here, daily in the upper right, hourly here, and then a 10-minute here. All right, let's start with the weekly because there are a couple things that when you're trading, so this is more of a swing trade. I would call it a swing trade, even though we are going down to the 10-minute and at the final piece of the puzzle. I think you could call this a swing trade because it's really an hourly trade. But in a lot of cases, you're probably going to get in and out in the same day. Swing trading can be anywhere from 1 to 10 days, in my opinion. All right, let's look at this IWM. We look at the weekly chart. Look at the first thing that's going on. First of all, we have been talking about this resistance at 200. We can see that there's no momentum in either direction. Both green DI and red DI are hanging out and crisscrossing below the 25 line. So we don't have any real strength in either direction. So when that happens, I'm thinking consolidation pattern rather than breakout or breakdown. All right, now we come into the weekly lines, 18 in the 40 week. But notice how we went about doing that. We had red bar, red bar, red bar, red bar. 4 down weeks in a row where we made lower highs for 4 straight weeks. We got a little separation away from the 4 on this last doji bar sitting right there. So negative bar, negative bar, negative bar, and then an indecision bar at the low. All right, now look at how the MACD is holding. Now, because we don't have green DI here, we know this is just a trade. We're just looking for a move back up to these highs. We're not necessarily looking for a breakout pattern. We'd need green DI to start kicking in if we're going to play something more meaningful like that. But I can always take a pinch play for a 2 to 4 week move and make a move back up into resistance. So that's step number 1. At least I have supporting evidence on this time frame, not necessarily a trade that I would take by itself, but I know I have supporting evidence that there's some potential support. Now, when we go to the daily chart, there's a couple things that you have to understand. Because this is showing strength to the downside on this decline here, we don't necessarily look for some big reversal or big move off of this run. I'm just saying, look, I think we could work our way back to the 18. All right, because I have support on the weekly, because I have red DI, which made a lower low in price and a much lower low, didn't even cross, well, right around the 25 level, you make a divergent peak here. And when I see that, I'm saying, okay, there's a pretty good chance we could work our way back up to 188. Okay, so I've got this target up at 188 thinking, if I can get a setup on the smaller time frame where I can have it make sense. I can't do it off of this time frame because if I buy here and put a stop here, I think that would be, well, you could probably do it, but it's like a 1-to-1 trade. And I'm looking for 2-to-1, meaning my reward needs to be about twice the size of my risk. So in order to pull this off, I've got to go to a smaller time frame to get those numbers to work in my favor. So now we go down and we know, so look at the evidence we have so far. First of all, we're coming into pretty significant support. We've got a pinch play. We've got a doji bar at the 18 and the 40 after 4 weeks down, right? We're stretched away on the 18 with room back to the rally. Okay, room back to rally back to the 18. Now, if I go to the hourly chart, this is kind of the setup time frame, right? All this is doing is giving us confidence that we could go down to this time frame, and if we see something that looks interesting, play it for a trade. All right, so now we go to our hourly chart. Now look at the way this played out. We had this counter trend rally where we came back down, and this is almost like an opposing trend trigger, and went down to a new low, minor new low, and then we get a reversal bar right at the bottom. This goes to a minor new low, and look at how much of a divergence. Well, I don't really like to call this divergence because these are too far apart. But what I will say is that there's a slowing of momentum. It's pretty dramatic. And it's really clear when you look at the ADX. Look at how strong the ADX was here on this reading at this bottom in this area. And then after we came down and made a new low here, look at how the ADX could not get above 25. So the moment I see that, my alarm is going off and I'm thinking, I've got to look for an entry pattern here. All right. Now, you can also start doing some trend analysis, right? So we can draw in our downtrend line. We know that we've broken the downtrend. That's the one. All of this is in my book and in my courses. And then we come back to test 2. So breaking the downtrend time is 1, testing the low is 2. And yeah, you can overrun a little bit in 2. It doesn't have to make a higher low or a double bottom. And then as this starts to move up to the upside, we should start to get intrigued. Now, what I'm looking for, and let's just move this over so we can see what's going on here. As this is happening to the upside, that's this move here to the upside. Now we're starting to get strength on this time frame, and look at what happens on this pullback. On this pullback, we get an opposing trend pattern. We can see that we get an ABC. 10-minute is showing an ABC down, and then we go into the zone and we come out briefly for a single bar, and by the end of the bar, we're turning back to the upside. All right, so I've got an up move here, and I've got a pinch play forming right above the 0 line. I've got a low ADX condition with green starting to kick in. I mean, can you see all the things that are starting to add up to a potential trade for this to the upside? Now, I know my target's only 188. So I've got to kind of go down to this 10-minute chart and look at what's taking place. So we know we've got a 0 line reversal with low ADX. So let's zero in on this. And one of the courses, I talk a lot about the open and how to handle the open. And if you notice what took place here, we opened here on the 29th. The 29th is this day here, this where this bar reversed. All right, now we get a down move to the downside, and then we get a move back up. We undercut this low, we move back up and close, and then we kind of test this area again and turn back up. So what is this? This is an undercut and rally on a 10-minute. Now, I'm not going to go down to the 2-minute, but I think it would show up a little bit better as an undercut and rally there. So coming back up through this bar right around 185.50, I can take this trade and risk about a point. Now, I know I'm at 185.50, and I know my target's at 188. Is that 2-to-1? It is 2-to-1. I can take this as a 2-to-1 trade. Now, usually when I take a trade off of a 10-minute chart, right, if I'm triggering off of a 10-minute chart and the hourly is the time frame, it's an intraday trade, all right? It's not something I would really call a swing trade, but there's nothing wrong with looking at it that way. And if you take it, you could really look at this signal here and say, I open here, come back down, and coming back up through the open, I can take this trade, put a stop here, and trade it up to there. And if it takes a day, day and a half, it should be done within a day and a half. If it doesn't happen on the first day. Now, when I'm going to do this as a swing trade off the hourly, I need to get in early. It needs to be like in the first bar or the second bar. I can't do it in the end of the day. It's too much risk. I'm putting if I put an entry in here, I'm subject to a lot of gapping risk. Where in this case, I've made a move in my favor. My stop's down here. I've got a little bit of room. I hope this is making sense. But in most cases, again, when I'm going down to this 10-minute time frame, I'm just going to trade it for the day and see what I can get out of it, and hopefully go and hit my target, which again happened in this case pretty quickly, it just basically turned up and took off. So we have this combination of support on the weekly chart after a decline with a pinch play. We have no strength in the sellers. We're stretched away from the 18 on this time frame. We've got a divergence taking place in the DI, suggesting a rally at least back up to the 18. Then we get our 1, 2, 3 reversal followed by the pinch play here, and that sets up our trigger on this time frame. This is almost everything. I mean, there are so many different elements out of my course that are being discussed here. I just thought it was worthwhile to go back and review. All right, let me know if you have any questions or comments. Thanks.